Markets reverse Monday's losses to end a volatile session in the green. Nifty near 23,700, while the sensex also ends higher. Broader markets outperform Nifty and the Nifty Bank. All sectors except IT end higher for the day.
Berger Paints is actively looking to buy Akzo Nobel India stake. The deal is valued at approximately 10,000, 12,000 crore rupees. JSW Indigo Paints also in the fray to acquire stake. That's a CNBC TV18 exclusive.
ONGC rallies as CLSA upgrades the stock, expecting higher production and improving realizations. Zomato slips close to 5% after Jefferies downgrades the stock, citing rising competition and quick commerce as a key risk. Hello and welcome to a fresh new edition of Markets Forward, your go-to program as we wrap up the day's trading action, but get you everything you need to prepare you for the next trading session. Yesterday, of course, was a very, very tough one. Today was better, much better. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, but after a 400-point fall that we had yesterday, today we managed to recover less than 100 points in the green throughout the day, but in a way a feeble recovery.
Absolutely. At one point, it was looking like it would be like a 200-point kind of a day. But we closed with about 80, 90 points or so in the green. So just a couple of points. So Nifty did okay, about 1/3%, a little more than that. Bank Nifty, a little better. But actually, the mid and the small cap indices beat what the Nifty and the Nifty Bank did. And those two indices had about 1% each in terms of gains, slightly less than that by close. The only sour point in terms of sectors was the IT services index, which ended down about 0.7% or so. Otherwise, all at least meaningfully large sectors were up and about in the green, and we'll talk more about IT in a bit. Apart from that, I mean, lots of single stock action. No real one sector, maybe oil and gas perhaps, right? I mean, ONGC was up. Reliance, after many weeks, looked better with what about 1.5%, 1.75% kind of a gain. So, I mean, yeah, oil and gas and maybe CPSE as well. At the entire PSU space where there was, I mean, you can sort of draw the thread across a variety of stocks in the PSU space with a common theme being the fact that they were all government owned. So that's about it. Otherwise, scattered kind of action, advances outnumbering declines by a healthy margin, nowhere close to the 6:1 kind of advance decline in the morning, but it was still pretty solid. Rima.
Okay, and GAIL and IGL, add that to the oil and gas PSU list, which did very well in trade. But let's tell you what we have for you on our show today. We start with the top movers and shakers of the day with Vivek. Stocks on our radar include Berger as it eyes Akzo Nobel India's stake. Zomato shares took a big hit following the Jefferies downgrade, while ONGC surged on the back of CLSA's bullish call. And then we'll tell you the key market events to watch tomorrow. But first up, let's get to the big movers of the day with Vivek.
Well, thank you so much for that. Very strong recovery after the kind of sell-off that we saw yesterday, and the breadth, very, very good, like you just mentioned. Now, we'll have to start off with the top Nifty gainer, one particular space that you just highlighted, the oil and gas space. ONGC, in the last week itself, we've seen a couple of upgrades coming in there. Last week, Jefferies went ahead and upgraded the stock. Today, CLSA quite bullish. They reiterated the stock as a top or high conviction outperform rating. Stock ended up at close to 4%. The other stock from the broader end of the markets was an exchange stock. BSE today up almost 6%. Remember, yesterday BSE took a very sharp hit, but today it recovered very sharply. We'll watch out if there's any development as far as BSE is concerned. From the Pharma pack, remember the entire healthcare pack continued to rally, especially in the first half of the session. Jefferies upgraded the Biocon today, stock higher by almost 7%. And India Mart, a double upgrade coming in for this particular name from JM Financial, stock higher by almost 6%. But quite a few laggards as well, despite the fact that the markets were very strong today. TCS, a couple of days prior to the results, saw quite a bit of selling pressure, almost 1.5% lower. Zomato, a downgrade coming in from Jefferies, they see competition in quick commerce, almost 5% lower for Zomato. ITI, this particular stock has seen a very, very sharp rally in the last few trading sessions, but today hit the lower circuit, in fact, one of the top laggards in the broader end of the markets. And lastly, Blue Star, again, a downgrade coming in from Jefferies. You actually saw the stock ended low by almost 3.5% in the session today.
Okay, all right. Lots of action, right, in terms of individual names. Vivek, thank you very much for that. Well, let's go across to our guest. Jai Bala is with us of cashthechaos.com. Jai, good to have you with us here. Thank you very much for your time. For our viewers who are tuning in now, I mean, what's the assessment? Is it looking a little tricky, still looking, I mean, sell on rallies kind of a market?
Yeah, that's what it looks like to me, Prashant. It's just a matter of time, in my opinion, before the Nifty breaks the 23,263 low it registered last year, and it could probably have a slight bump up somewhere close to about 23,900 to 2,400 at a stretch. But it's just a matter of time before the low gives in. The main weakness is coming from the banking sector and the capital goods sector. Both have broken significant trend lines. And the Nifty IT index, which is still holding up, that's providing some succor to the market. But if Nifty IT index were to break 42,500, that's once again will pour cold water for the bulls.
Okay, let's get to one of the movers of the day, and that's Berger. This is a CNBC TV18 exclusive. Now, according to sources, Berger Paints is eyeing to pick up Akzo Nobel's India business. Rachna has the details.
The battle for Akzo Nobel's India stake is heating up. Berger Paints is likely to join the race to acquire Akzo Nobel's 74.6% stake as the global parent explores an exit from the Indian market. Sources have told CNBC TV18 that the competition is between Berger, JSW and Indigo Paints, and the value of this deal is expected to be in the range of 10,000 to 12,000 crore rupees. Now, Akzo Nobel's India market cap currently stands at around 16,000 crore rupees, while its revenue for the September quarter was reported at 982 crore rupees. Let's compare that to Berger Paints' performance, where the revenue was at 2,775 crore rupees in the same period. As the contours of the deal, whether cash or a hybrid structure, continue to take shape, CNBC TV18 is awaiting official responses from Akzo Nobel, Berger Paints and other companies involved. But we had the Berger management on the channel on November 6th, where they had said that though they usually look at smaller acquisitions, there is an interest in Akzo Nobel's India stake, and now we have it from our sources that the bids are being submitted for this acquisition. Back to you.
Thank you very much for that. Siddhartha Khemka is also with us on the show. Siddhartha, paints have had a rough ride over the last 12 months. One, the consumption outlook has been bleak. Secondly, competition has been rising. Stocks like Asian Paints, across the board, Berger Paints, they've all been under pressure. But now there is this consolidation opportunity. Do you like anything in the paint stocks? And what if Berger was to pick up Akzo Nobel? Would it be an attractive buy for them?
Hi, Rima. Good afternoon. So, yeah, you rightly said there's been some pain and pressure that we are seeing in the paints industry. If you look at not only from the increasing competition, the demand has been lackluster, and on back of that, some of the companies generally we have associated Asian Paints with an annual hike in the paint prices. But last year, around before the festive season, they took a price cut, and that shows how weak the demand is. So in this environment, I would say that among the listed peers, we would remain neutral, or we could avoid some of these names like Asian Paints, Berger. But this acquisition definitely is interesting, given that the consolidation will only help some of the players, incumbents, especially the likes of JSW Paints or Berger, which already has a strong brand and presence. I think, and someone, an incumbent like a JSW or an Indigo, acquiring Akzo Nobel could be a positive for the respective companies.
All right. Siddharth, stay with us. Zomato is the other one, right? I mean, the stock started lower. There was some recovery through the course of the day, but then finally it was down over 4% or so. Jefferies has downgraded the stock from a buy to a hold. And the main reason they're citing, of course, is competition. The other one was ONGC, where there was a sharp move in the stock price. Here also there was a brokerage commentary on the bullish side this time. Hormuz is here with both these. Hormuz.
It's the same quick commerce opportunity that was once the growth runway for all of these companies like Zomato and Blink and Swiggy has now become a concern for brokerages like Jefferies, who have downgraded Zomato this morning, and they have cut their price target as well to 275 from 335 earlier. And they're saying that this competition, the rising competition in the quick commerce space, will be a cause of concern for profitability for companies like Zomato. It's expecting 2025 to be a year of consolidation for the stock after it had more than doubled in 2024. It has also also cut Blinkit's EBITDA estimate sharply. It has halved its target multiples and also cut the EBITDA, profit and EPS estimates for Zomato very sharply for FY26 and FY27 as well, anywhere between 10 to 20% over the 2-year period. On the flip side, ONGC is where CLSA is reiterating its conviction. It has upgraded it to a high conviction outperform. A 360 rupee price target is almost a 40% upside from yesterday's closing levels. It is saying that once Eastern Offshore ramps up to peak production, that will increase ONGC's oil and gas production by 10 to 20% by the end of the year. That's a positive. The removal of windfall tax is a positive, which will help them earn more realizations. And despite triggers going their way, it is trading at a significant discount, not only to its own historic multiples, but to the historic multiples of its peers as well. So as a result of which, along with a healthy dividend yield of 6%, CLSA makes ONGC its high conviction bet among the top gainers on the Nifty today.
Thank you very much for that. Let's talk about Zomato first. Jai, the last time we had a little bit of a correction in Zomato, it was fairly short-lived. What are the charts telling you? Is there buying emerging now after today's fall?
The last time we discussed, Rima, I pointed to, it's having a potential of pushing to a last high at about 300 odds, and it's turned from 301. And I've mentioned 240 is a very important support. If 240 were to break, I think Zomato is likely to go into a significant correction. And it's had a stellar run since its listing. And likewise, delivery too, it's also looking like it might go below the low it registered sometime last year. So, most of these, and Swiggy is a very recent listing. I don't have enough price history to come to a conclusion. So both of them are looking relatively weak on the chart. So it's definitely an avoid for me.
Okay, definitely an avoid on both Swiggy and Zomato at this point. Pharma stocks, Biocon and Zydus Life were both buzzing in trade. Biocon, for example, by close was up almost about 7% or so. Now, one has got, again, a brokerage call. The other's got some news flow. Vinny is here with details. Vinny.
Yes, so a couple of news flows coming in for Biocon as well and Zydus. Now, firstly, in terms of Biocon, the brokerage call that came in from Jefferies, where they upgraded the stock to a hold from a previous underperform. Target price of 400 rupees, previous target price was 280 rupees, so increase in terms of target price. They're highlighting the positive triggers that have played out for Biocon in the recent times. One, in terms of the clearance coming in from the US FDA for their biologics plants in Bangalore, that is an important one. Other than that, approval for the biosimilar Stelara, which is slated to be launched in Feb 2025. And growth visibility for the biologics business has started improving. Now, going forward, what they're keeping an eye out on is in the terms of the clearance coming in for the Malaysia plant will be key to watch out for. How are they increasing market share across biosimilars as well as the generic semaglutide is a key factor to watch out for. And approval for the biosimilar Aspart is a key factor there that they're keeping an eye out on. Other than that, Biocon also said that they've announced the approval coming in for the biosimilar Stelara in Japan, which is an important one. And they in Japan, this will be commercialized with Yoshindo Inc. For in the Japanese market. So keep an eye out on Biocon on the back of that. Other than that, in terms of Zydus Life, couple of news flows coming in. One is in terms of an agreement and an announcement that is coming with CVS Caremark, which is to add some of the drugs of the company in their portfolio. Now, these drugs have a market size of around $10 billion in the US market as on August 2023. So, big one coming in for Zydus Life because this is mainly used in treatment or helping in treatment of type 2 diabetes, which is picking up pace globally as well. And the last announcement that came in from Zydus was in terms of a priority filing and acceptance that they've gotten from the US FDA. And this is for CUTX-101, which is a drug that they've gotten a 6-month priority review. So this is expected to come in terms of launch will be sooner as well. So that is why a positive for Zydus.
Okay, all right, Vinny, thank you very much for that. Jay, any other sort of observations for those who are taking trading or, looking at protecting their portfolios overall? For those who are watching, just because your view is cautious out there, are there any particular sectors where one should exercise more caution, or generally it's all looking slightly sour at the moment?
Yeah, it's more or less, better to be cash. I don't find, other than anything in Nifty Pharma Index, some select names could be positive for a while. But even there, the upsides could get limited. But the sectors you definitely have to be more cautious is banks and the capital goods. And Larsen & Toubro is at the precipice of breaking the significant trend line from the pandemic low, and that's been providing support all through this bull run for the stock. So Siemens, another stock within this sector, has broken down from a triple top. So it might be Larsen could be the leader, but Siemens is probably providing indication of what's happening in the sector. So be very cautious in banks and capital goods. Any further deterioration, even a small deterioration, will drag further, and the capital goods index will become a laggard.
Last 2 months, Jai, the overall sort of conversation was that large caps will move to large caps, mid caps and small caps will see pain. It's not happened. I mean, large caps, individual stocks have fallen and kept falling, right? Mid caps and small caps, not so much. Look at changes from the highs, etc. as well. As we start 25, the conversation largely is that the big laggards and stocks, large caps will do better. Those especially which have seen a lot of price damage. Tata Motors, Reliance, a few others as well. You think it could pan out or unlikely, Jay?
Yeah, I think even the stocks, if the Nifty has to break down, you might even have breakdown in the Adani Group too. I'm very cautious about getting negative on them because of the associated volatility and the news-related movements. But the price structure is such that even the Adani Group could break the November lows, which is quite a distance from where it is now. So the saying goes, it all starts small and then happens, like a flood. So it might be the large caps might be holding for the moment, but once the floodgates open, the banks, which I said is 1/3 of the market, if that were to break down below 49,700, I think that's giving you an important signal, the overall economic condition of the Indian markets. So watch 49,700 on the banking index. That might be a barometer for the whole market.
Siddhartha, what about ONGC? Big mover today. The stock is corrected close to about 30% in the last 3 months. CLSA says valuations are attractive, and plus there is the dividend yield of 6%. ONGC at these levels?
Yeah, Rima, I think, yes, it definitely makes sense to look at some of these oil and gas companies in this environment. Crude has remained largely stable, and we have seen the growth in production, especially for the likes of ONGC, is driving the earnings. So apart from the ramp up of the KG 98 and 2, and as well as the Daman facility, I think they are also looking at strategic initiatives like LNG agreement from a long-term perspective. So overall, we are expecting an 11% volume growth over the next 2 years, and that would be driven by the new capacities that they would add. And that would support with a favorable pricing. I think earnings growth at this valuation definitely looks good to look at ONGC. So we have a buy rating and a target of 330 from a 1-year perspective.
Thank you, Jai and Siddhartha, for joining us on the show. Get into a short break. On the other side, the top corporate voices and the big events to watch tomorrow.
Okay, welcome back. You're with us here on Markets Forward. So we had the management of Happy Forgings with us. I'll get to that in just a bit. But let me quickly run you through the opinion coming in from the Steel Secretary, Government of India. Now, the government has launched the second round of production-linked incentive scheme for the steel sector, downstream mainly. And, H.D. Kumaraswamy, the Steel Secretary, told us that the outlay of 4,400 crore rupees is a carry forward of the savings from the first tranche of 6,400 crores. He added that investments and capacity thresholds have been reduced by 50%. Also added that the government needs $120 billion in investment in order to become self-reliant in the steel sector.
And in other corporate commentary, Happy Forgings Board has approved a capex of nearly 650 crore rupees for setting up new facilities. The management says they expect a revenue potential of 600 to 800 crore rupees with improved margins and return ratios from the new facility. For the overall business, the company is looking at a capex of 1,000 crore rupees over the next 2 to 3 years, which will be funded through internal accruals. They also anticipate higher contribution coming in from industrials and exports going ahead.
All right, well, some sound bites now. So we had Ashish Gupta, Chief Investment Officer at Axis AMC, earlier with us in the morning. So he blamed tighter monetary conditions and slowdown in government spending for the slower growth that we're witnessing right now. Listen in.
One, of course, is the slower government spending. That was particularly impactful in the first quarter because of the election. That is certainly changing, and we have seen over the last 2-3 months that pick up. The second was the monetary tightening that happened, and there we have had since August the RBI stance becoming more accommodative and neutral. But unfortunately, we have had this simultaneously exit of foreign money and pressure on the currency.
And before we wrap, we'll bring you some of the key market events to watch for tomorrow. Upasna is here.
Well, it looks like quite an eventful day tomorrow. First up, let me start with the global economic cues. Firstly, coming to US will be reporting its initial jobless claims data, crude oil inventories, ADP non-farm employment changes data, and also, most importantly, Fed Governor Waller will be speaking on economic growth outlook. Now, coming to UK, Bank of England Deputy Governor Woods will also speak on the economic outlook for the country. Now, let us look at the key stocks that will be in focus on back of corporate action. Camlin Fine Sciences will be in focus tomorrow, as tomorrow marks as the record date for the right issue. Now, right issue will be in the ratio of 5:41. And now, next up, even TRIL, that is Transformers and Rectifiers Limited, will be in focus tomorrow, as the company will be reporting its Q3 FY25 numbers. Now, on the IPO front, Standard Glass Lining Technology IPO closes for subscription tomorrow, and additionally, PM Modi will be also visiting Visakhapatnam on Jan 8th for green hydrogen project launch backed by NMDC. So hence, these are all the events that we'll be closely tracking for tomorrow.
All right, Upasana, thank you very much for that. Before we say goodbye, here's the growth code for this week, a collaborative initiative between Grow and CNBC TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we will help you understand how scammers exploit the fear of missing out in F&O markets and the red flags that you need to be watchful for.
In futures and options trading, scammers prey on fear of missing out, of FOMO, creating a false sense of urgency that pushes traders into reckless decisions. The promise of can't miss opportunities, pitch exclusive tips and flood social media with fake testimonials, making traders feel that they will be left behind if they don't act immediately. With the lure of high leverage, where tiny price shifts can lead to massive gains or devastating losses, they exploit the impulse to jump in fast. Scammers tout guaranteed profits or subtly imply that everyone else is winning, fueling the panic and pressure to follow suit. But the moment you enter the trade, they will pull out, triggering the price crash that leaves you holding the bag and the losses. To protect yourself, never fall for high-pressure tactics.